Is saving your way to retirement impossible? Let's watch and find out.
Everything you've been told about retirement is a lie. Saving for retirement is impossible. What? I know. This is so countercultural. We're supposed to save for retirement, right? We've been told that since we were kids, but it's not true. Hear me out when I say this. You cannot save your way to retirement, nor can you save your way to wealth. It doesn't happen.
So I've watched the entire long form video of his as well. In his general premise, it's the rich dad, poor dad premise that you can either save your way to retirement and building your net worth, or you can invest in cash flow generating properties and get your financial freedom that way. And there's two approaches. Neither one is right for everybody, so you have to decide for yourself. But I think knowing about those two approaches is important. Is the game plan that most of us are using for retirement flawed? Let's watch and find.
If you take a look at the modern American game plan, it leaves you at retirement with around $250,000 in 401ks and IRAs. Is this going to be enough money? Because already when you're 55 years old, peak earnings is right around $94,000 a year. And so if you get accustomed to living off of $75,000 or $80,000, then this is basically enough money for 3 years of retirement at best. You're not going to run out of money in 3 years, so what you're going to do instead is probably not retire, get a job. You're going to massively reduce your income. If you're forced retirement, then you're going to have to figure out how to all of a sudden cut your expenses back and live on a whole lot less.
Okay, so Chris is basically right. The average American is not saving enough money. My solution to that is we need to save more money and we need to invest. Chris is a fan of buying and holding rental income properties. No one solution is right for everybody, so you should know about both. What's got so many 40, 50, and 60-year-olds upset? Let's watch together and find out.
Well, a new survey found that 20% of Americans fear they will never be able to retire. 70% of those said they will not be able to afford it. 40% of Americans say they would prefer to work as long as possible and not fully retire.
I think a lot of Americans are angry because we were sold the American dream. You go to college, you find your spouse, and then you work and you retire.
There's
and
pension.
People are like, I did that, and now all of a sudden I don't have a job in my field. The job I used to have is an app now, and I don't know what I'm supposed to do with this degree that I was told to get. And I think people...
Okay, so that's a legitimate concern. And the reality is technology is making it harder for all of us. And really what we can do is continue to improve our skills and continue to get our name out there and look for the very best job for us. Is the average American saving enough for retirement? Let's watch together and see what George Camel thinks.
Even though people are worried about whether or not $1 million is enough to retire on, most of them don't have that. They have 10 to 15% of that number saved up by the time they need to hang up the old work hat and hit the dusty retirement trail. And it's clear that many Americans simply aren't prepared for retirement. Even the peak at $182,100 is nowhere near enough to cover the later years of your life.
I love George, and he's absolutely right. You know, $182,000 is nowhere near enough money to retire. So what do we do? You know, unfortunately, it comes down to sacrificing today for tomorrow you. And I think most of us need to strive for, I know it's aspirational, but to strive to save 20%. And it's not enough to just save. We also have to invest that and work to beat inflation so we can get compounding working in our favor. Once you're retired, do you still have to have a lot of stuff going on every day? And what do you tell your friends when they ask, so what are you doing today? Let's listen to one retiree and see what he says.
But in the in the first year, every time she said, like, what do you have going on tomorrow? It would sting. I was like, oh man, I don't have much to say. I really need to have a good list of cool stuff. And eventually I realized that was just my old programming getting at me saying, hey, if you don't have a big list of important stuff you're doing, you're not contributing and you're wasting air that some productive member of society could be breathing. And so I had to recondition myself to, when I hear that question, what do you have going on tomorrow? It's just a question. I don't have to.
He's absolutely right. And I like what he said about reconditioning his thinking. It's a big transition. It's a fun transition. And I want your retirement to be your retirement, not somebody else's view of what it should be. One of the best ways we can prepare for our retirement is to listen to the advice of recent retirees.
I've been retired for 1 year and 5 months now. It was a struggle. I realized that it literally takes a year. Best advice I can give you if you're struggling with retirement is let go of who you were and start to think about who you want to become. I didn't start feeling better and kind of getting into my retirement groove until I let go of my old identity. Started to get rid of my old work clothes because they just carried that energy, and started to think about who I'm becoming. Like, I was that corporate executive. I'm not anymore. I don't want to be a has-been for the rest of my life. I don't want to be somebody that used to be somebody, or in my own mind I used to be somebody. I need to be someone new.
I think that's great advice. We need to be somebody new. I love her authenticity, getting rid of her work clothes. Retirement is a transition. I want you to focus on who you're becoming, not who you were. As a financial advisor, I'm a big supporter of people retiring in their 50s or early 60s so that they can take full advantage of what I call the youth of their senior years. So many people are surprised to hear that I'm not a fan of the FIRE movement, financially independent, retire early. Let's watch this video and then I'll share why I'm not a fan of it.
So if I save 60% of my salary, I should be able to retire by 40. Mate, enough with that. Are you coming for our first ever after work drinks? I'm being serious. There's no way I'm going for drinks after work. I'm putting every single penny towards retiring. Sounds really fun. I'll be the one laughing soon.
Okay, so why am I not a fan of the FIRE movement? For exactly this reason. You're only young once, and to save 50, 60, 70% of your salary means you're not going to be able to enjoy the youth of your youth. And I want you to enjoy each chapter. And that's why I think for many people, it's not the right decision. So what do we do to keep ourselves mentally acute in retirement? Let's watch this video together and see if we can come up with some ideas.
You know, when people ask me, what do you think about retiring at such and such an age? I think we should think about retiring as a time when we don't work for money anymore. But I really think it's probably important that people are working throughout their entire lives, meaning they're working on something that is keeping their brain challenged. As of this recording, my dad is almost 87 years old, and he still works every day at a quarry. Now, I have no idea why. He doesn't need to be doing that.
Okay, so in Peter's case, and I love Peter Attia, he's telling the story about his father, and for his father, the right thing to do is to keep working. His father sells stone, and he loves that. But for many of us, the right solution is to move on to the new chapter, to take advantage of the youth of our senior years, but to continue to challenge ourselves mentally. As a financial advisor, one of the things I like to talk to my clients about is the power of seemingly simple decisions. Let's watch this video from Dave Ramsey together, and then we'll talk about it.
The average car payment in America today is $503. That's just cray-cray. That's nutty. If you invest $500 in a decent growth stock mutual fund from age 30 to age 70, you'll have over $5 million. That one thing will make you worth $5 million.
Okay, that's a great example. And the decision to pay cash for a nice used car versus taking out a car loan for a nicer used car or even a new car can make a big difference. And for many of us, a decision like that tends to be fairly not sacrificial. We're still driving a nice car. We're still driving something that can get the job done. But look at the power of that, $5 million. So what do rich people know about 401ks that you and I don't?
401ks made sense when tax rates were coming down. You get a tax deduction up here, it grows tax deferred, and you retire and you pay tax down here. But we know taxes are going to have to go up. So how much sense does it make to take money out of your check today, defer that baby till taxes go up to 50, 60%, then I'm going to take it out and pay? That doesn't make any sense. So what I tell people is, say, does your company have a 401k? Yes. Does it have a match? Yes. Explain the match. Well, if I put in 4%, they match with 4%. Okay, good. I do that. That's 100% rate of return. But above the match, I wouldn't put in my 401k anymore. I would put that in.
Okay, so I agree with everything that he's saying. If you think your personal tax rate's going to be higher in the future than it is today, you're probably better off with what's called a Roth 401k. And then as far as the company match, absolutely. If you can get free money from your employer, you should absolutely do that.